And welcome to this week's edition of Echo45 Advisors Market and Economic Update. In this video, we'll discuss the US dollar, international stocks, and gold. We'll focus on what recent trends in each of these areas mean for your portfolio. Global events have been driving a lot of market activity this year. High oil prices, geopolitical tensions, and evolving tariff policies have all been in the headlines. But beyond many of these trends is something that gets a bit less attention, which is the level of the US dollar. Currency movements can have a meaningful impact on portfolios, influencing everything from international investments to commodities like gold. So over the next few minutes, we'll break down what's been happening and why it matters for long-term investors. First, let's talk about the dollar itself. After reaching a peak in 2022, the dollar weakened as global growth stabilized and investors began looking beyond US assets for opportunities. More recently, it has partially rebounded as geopolitical concerns have pushed investors toward safe haven assets. There are three important things to keep in mind here. First, a stronger dollar isn't always a good thing. Yes, it makes imported goods and international travel more affordable, but it also makes American products more expensive for overseas buyers, which can hurt US businesses competing globally. Second, the dollar's value is shaped by many factors, including interest rates, trade flows, fiscal policy, and more. Interestingly, last year's tariffs actually weakened the dollar more than strengthening it, which is opposite of what economic theory would typically predict. This partly reflects concerns about US policy and the country's long-term fiscal position. Third, despite these pressures, the dollar remains one of the world's most important currency. It still dominates global reserves and international transactions. This year's rebound is further evidence of its importance during uncertain periods. Next, let's look at how the dollar's decline over the past year has affected international stocks. In 2025, international markets delivered very strong results. Developed market stocks, as measured by the MSCI EAFE index, returned nearly 32%, while emerging market stocks, as measured by the MSCI EM index, returned over 34%, both well ahead of the S&P 500. A weaker dollar was an important part of that story. When you invest internationally, those assets are priced in local currencies. If the dollar weakens, those local currencies returns convert back into even more dollars. So currency movements can be a significant driver of international returns, on top of the underlying performance of those markets. Valuations are also worth noting. International markets have been trading at a noticeable discount to the US equities for some time. This isn't a short-term timing signal, but it is an important input when thinking about how to build a balanced portfolio. So far in 2026, international markets have continued to modestly outperform US stocks, even as the dollar has partially recovered. Finally, let's discuss gold, since it can be related to the same factors that drive the dollar as well. Gold has been one of the most talked about assets in recent years as it reached an all-time high as recently as late January. Since then, gold has declined roughly 14% from that peak. This might seem puzzling since it's often a safe haven asset. Part of this explanation is that gold had already attracted a lot of investor interest during its rally. When a large number of investors pile in, gold can start moving in line with other assets. And during periods of market stress, investors may shift back from gold to the dollar. This isn't the first time gold has behaved unexpectedly. Between 2011 and 2020, gold was essentially flat, even as the Fed kept policy accommodative and markets went through several bouts of significant uncertainty. It was also relatively flat during the inflationary period from 2022 to early 2024. The most useful way to think about the dollar, international investments, and gold is that they form important parts of a balanced portfolio. In other words, they are highly unpredictable as standalone investments, but can work alongside other asset classes in a portfolio over time. We've only scratched the surface on this topic, but we hope you found these insights helpful. If you would like to discuss how any of these trends might affect your portfolio, please don't hesitate to reach out. We look forward to speaking with you.